Hey everyone, welcome back to Corporate Decoder. Today, the Hartford Insurance Group Incorporated just dropped its latest 8K, and it is all about their financial results for the second quarter of 2026. Quick note, this is not financial advice, just my take on public filings for educational purposes. While this filing is mostly an announcement with attached documents, we can still glean some insights into how the company is performing and what it means for investors. This is an official report filed with the US Securities and Exchange Commission. These reports are a must for publicly traded companies, and they keep us informed about important company events. This particular filing is an 8K, which is used to announce major events that shareholders should know about. The most important date here is the 23rd of July 2026. This is when the company officially announced its financial results for the quarter that ended on the 30th of June 2026, and also released its investor financial supplement, which is like a detailed report card on their finances. The company we are looking at is the Hartford Insurance Group Incorporated. It is a big name in the insurance and financial services industry. They are incorporated in Delaware and have been around for a while. You might know them from their ticker symbol HIG. Let's talk about what is being traded on the stock market. The Hartford has its common stock listed on the New York Stock Exchange. This is the part of the company that most investors are familiar with. They also have different types of preferred stock and notes, showing a diverse capital structure. This section is the core of the filing. It tells us that on the 23rd of July 2026, the Hartford Insurance Group Incorporated released its financial results for the quarter ending the 30th of June 2026. They put out both a news release and an investor financial supplement, which are basically the official documents detailing how they performed financially. The news release and the financial supplement are furnished as exhibits. This means they are part of the filing but are treated a bit differently. They are not considered filed under certain sections of securities law, which means the company has a little less liability if there is a mistake, but they still provide us with the crucial financial details. Think of it as an official announcement with supporting documents. Exhibit 99.1 is the actual news release. This is where the company usually highlights its key financial achievements and provides some commentary from its leadership. It is designed to be a summary for investors and the media. Then we have Exhibit 99.2, the investor financial supplement. This is the more detailed document. It contains tables and figures that break down the company's financial performance. This is where we can really dig in to understand the numbers behind the headlines. While this specific 8K filing doesn't contain the actual financial tables within its text, it points to them being in Exhibits 99.1 and 99.2. Typically, these supplements would include things like revenue, net income, earnings per S-hair, and breakdowns of different business segments. For example, in a typical supplement, you'd see how much money they made from property and casualty insurance, life insurance, and investment management. You'd also look for changes in their reserves, which are funds set aside to pay future claims, and how their investment portfolio is performing. Let's imagine what might be in those supplements. We'd be looking for their net written premiums, which is the total amount of money received from policyholders. We'd also check their net income, which is the profit after all expenses. Earnings per S-hair, or EPs, is a critical metric that shows how much profit is attributable to each outstanding share of common stock. A higher EPs generally means better profitability. We also want to see their expense ratios. For an insurance company, the combined ratio is a key indicator. It is the sum of the loss ratio, claims paid out plus loss adjustment expenses, and the expense ratio, underwriting expenses not related to claims. A combined ratio below 100% means the company is making a profit on its underwriting operations, before accounting for investment income. Historically, the Hartford has been a stable player in the insurance market, with a P/E ratio around 3.4. It suggests the market sees the company as relatively undervalued or has priced in stable earnings. This is quite low compared to the broader market, hinting that investors aren't expecting huge growth but rather consistent returns. Looking at the context provided, the Hartford is a diversified financial services and insurance company. This means they likely have multiple revenue streams which can provide stability. Headlines suggest a positive outlook, with one noting that the Hartford remains a buy as major P5C insurer impresses with improving margins, indicating they are becoming more efficient or able to charge more for their services relative to the cost of claims. However, no company is without its risks. For insurers, key risks include unexpected increases in claims due to catastrophes like hurricanes or economic downturns that affect investments. Changes in interest rates can also impact their profitability, especially on fixed income investments. The fact that they are filing an 8K for quarterly results suggests they are providing timely updates, which is good for transparency. In terms of a historical comparable for a steady, mature company like the Hartford, an 8K filing like this is usually about reporting performance and outlook. It doesn't signal immediate crisis like a going concern warning, which we've seen with companies like Bed Bath & Beyond or Rite Aid, where the very existence of the company was in question. Instead, this filing is more akin to a routine checkup, reporting on how the business is performing under its current strategy. The key is to analyze the numbers within those exhibits to see if the improving margins mentioned in the news are actually materializing. Finally, the report is signed off by Alison G. Niderno, who holds the title of Senior Vice President and Controller. This confirms the authenticity of the filing and shows responsible oversight by the company's finance leadership. So, what is the story here? The Hartford Insurance Group Incorporated is providing its latest financial update. While the 8K itself is more of an announcement, the attached exhibits are where the real financial meat is. The available context suggests the company is performing well, with improving margins. And its low P/E ratio might make it appealing to value investors looking for stability rather than explosive growth. The overall direction seems positive for a company in the financial services sector, especially if they can continue to manage costs and claims effectively. The risk I am watching is whether the overall economic climate could impact their investment portfolio or lead to higher than expected claims, especially given the current market conditions. My biggest concern would be any mention of a material weakness in internal controls, or a significant downturn in underwriting profitability, which is not indicated by the external information here. What I am actually looking for in those detailed supplements is validation of those improving margins and a clear picture of their capital position. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Join our Discord community, linked in the description, for further discussion.